Hello, everyone. This is Dan Veru from Palisade Capital Management, and it's Wednesday, November 6th, the day after the election. Well, the people have spoken, and they have spoken quite clearly. There's no question who's going to lead our nation. While the Senate will switch control to Republicans, leadership of the House of Representatives is still to be determined. Being respectful that for many, this was not the outcome that they hoped for, the policy implications are significant, and I have been working with my portfolio managers and analysts discussing the potential market implications. For stocks, this is clearly a positive, most notably for the broader stock market, as the incoming administration is likely going to focus on pro-growth policies. Given the president-elect's America First focus, small cap stocks should benefit the most as pro-growth incentives could help domestically focused companies. From a sector perspective, the likelihood of less regulation is a positive for banks in two ways. Less regulation improves profitability, but also merger and acquisition activity could pick up, which is a profitable business for many financial institutions. While tariffs were a major focus on the campaign trail, we believe that the tariffs will be focused on China, with a particular emphasis on protecting our leadership in technology, most notably in the artificial intelligence field. The semiconductor industry could continue to do quite well in this environment. Industrial companies focused on U.S. infrastructure should continue to benefit. Some of the multi-industry industrial leaders that have strong cash flow could benefit if allowed to accelerate acquisition plans. Switching to interest rates, we do think that this might slow the pace of cuts to short-term interest rates if the U.S. economic growth accelerates, but we do expect the Federal Reserve to cut interest rates tomorrow at their next meeting. Long-term rates are responding and rising today to the election victory, causing a steepening of the yield curve. A steeper yield curve typically tends to reflect a more pro-growth policy for the economy. In conclusion, the election is now in the past, and for financial markets, that's a positive. A long, drawn-out process where the winner was not known could have weighed greatly on stocks and interest rates. Unlike the election of 2020, within 24 hours, we know who the president is and which party will lead the Senate. Leadership of the House of Representatives usually takes a while longer to find out, but we should know in a day or so. As more policy initiatives come out, we will have more updates for you. Thank you for listening.